Welcome to the AgriStability 2023 Producer Information Sessions. Thank you for joining us. What we will be covering today is why participate in the program. We're going to give you an introduction to the AgriStability program and how it works. We're going to go through some examples on how you fill out your forms. And towards the end, we're going to review also the calculation of benefits statement, which is the finalized statement once your AgriStability file has been processed, approved, paid, and closed. So we've reached out to new producers enrolled in AgriStability. We recognize that there is a need to support producers about the program and just educate and introduce them about more detail about the program. Producers are welcome to attend, and we've held some of these sessions online in the past, and we just held some sessions here in January and February of 2023, and people were able to sign up and register, and we also have some upcoming sessions for the crop insurance program as well. So just to touch on why participate in AgriStability. AgriStability does provide affordable protection for the whole farming operation. The program fee is cost effective, and any payments that you receive through AgriStability program do not affect your future fees to participate. And those fees are based on your reference margin. So for example, for every $100,000 of reference margin, the fee is $315, and there's an additional $55 administration fee. And we're going to explain coming up here in the session about reference margins and the margin definitions, and we're going to go through some really good examples to help you understand how those all work too. So just to put it into perspective too for the affordable cost, on average, Saskatchewan producers pay about 70 cents per acre is the average fee, or on the livestock side of things, it's about $1.21 per head is what the fee cost is. It does provide financial support to help offset those large margin declines. So it is a margin disaster type insurance. So when your farm is in that disaster situation, AgriStability may provide that benefit. It's also very personalized coverage. It's based on your farm's history. Each operation is unique, and we look at each one individually and come up with that personalized coverage. It also gives you access to other credit options and programs. So AgriStability can be used as security for the cash advance program, and sometimes the banks often request your calculation of benefits for loans or lines of credit. Just to give you a little bit of information on the participation rate in AgriStability, when compared to the overall farm cash receipts generated in Saskatchewan, which is approximately $16.5 billion in total farm income generated, AgriStability covers 51% of those operations, which is about $8.3 billion that are participating in the AgriStability program. And that represents 18.5 million acres of crop and forage land and more than 822,000 head of cattle. And this information is based on the 2020 program year data. A little bit of history on previous benefits that have been paid to Saskatchewan producers. These statistics are as of December 31st of 2022. A couple to highlight, in the 2016 program year, there was just over 81 million that was paid to producers. In that fiscal year, there were low cattle prices, and there also was a large decrease in red lentil prices that year, and those would have driven those payments for the 2016 year. In 2018, in this 6-year history, that's definitely been the highest year of benefits that have been paid out to producers. Again, dry conditions, crop price decrease in durum and lentils. And in 2019, the drought conditions, there was crop left out over winter. We've paid out just over 98 million for that year. And there was also crop price decrease for peas, lentils, durum, and canola. And currently in the 2021 program year, we're just at over 46 million. Those files are still being processed, and approximately 74% of those payments are due to the crop production decreased due to the drought and also the jump in the expenses for operations. So to enroll in AgriStability, the standard enrollment deadline is April 30th. And for the 2022 program year, that enrollment deadline was extended to June 30th. Approximately 10,775 participants enrolled, and more than 405 producers that had joined had been maybe away from the program for a while and returned. They said, you know what, I want to sign up. 2021 was such a drought year. I want to be back in the program. Or they joined the program for the very first time. And for the 2023 program year, that deadline is April 30th to enroll and sign up for this current program year. There are specific requirements to participate in the AgriStability program. You need to be filing farm income and loss to Canada Revenue Agency. You have to pay your program fees by the final deadline of December 31st. And I'm going to review those deadlines with you too further on. We'll highlight some of those deadlines towards the end of the session. And for new producers, you can complete a new participant package that you've already received in the mail. So anyone who signed up as a new participant in 2022, you would have been sent that new participant package. You would have already received it in the mail. And if you can't find your package, please contact the AgriStability call center and we can get one sent out to you, or even your local SCIC office as well. So we did simplify participation to make it easier for new participants to join the program. So if you have not been in the program for 4 or more years, then you do have the choice of submitting either 3 years of historical information or 5 years of historical information. So once you're in AgriStability and we capture that information, the goal is to get the full 5 years of history. And that's what we compare your program year to determine whether you're in a benefit or not. So whether you submit 3 years of history or 5 years, it basically does set your coverage. So 3 years of history is a lot easier for you to submit. There's not as much paperwork and information for you to dig through. But if year 4 and year 5 were really good years for your operation and you had really good margins those years, I would encourage you to do the extra effort and submit all 5 years of information, because that definitely can improve your historical reference margin, which basically improves your coverage for the AgriStability program. So SCIC does encourage producers to consider participating in our risk management programs as part of the comprehensive plan for your farm operation. So on the crop insurance side of things, a producer has coverage for specific crops that they choose to insure from the start of the seeding season until harvest is complete. With AgriStability, you have coverage for all of your commodities, including those that are in storage, starting from the beginning of your fiscal year the beginning of your fiscal year to the end of your fiscal year. Any reductions in the value of your inventory, or if you've got an increase in costs or those commodity prices fall, those can contribute to losses that the AgriStability program can cover. With livestock price insurance, it does a great job of protecting from a price decline for a specific settlement period of time. AgriStability offers, again, margin risk protection for the whole farm over the course of that entire year. And with wildlife damage, that program is open to all producers in Saskatchewan. It provides crop damage compensation and predation compensation caused by wildlife. You can receive compensation for steps taken towards crop damage prevention and predation damage prevention to reduce those problems that you have with wildlife. AgriStability, that can help provide coverage for things like maybe grain losses in grain bags due to wildlife. So now we're going to get into the AgriStability margins and explain how they work and how they are calculated and what components make up those margins for your AgriStability program. We have 2 key margins that we look at. So the first one is the program year margin, and the second one is your reference margin. So the program year margin, that is your current year's situation for the farm. That looks at your current year income, expenses, and then there's accrual adjustments that I will get into the details about. That's the year that we are calculating and determining whether you're going to be in a benefit for that program year because it has declined compared to your historical reference margin. And the reference margin, that is made up of your previous 5 years of program margins. And we use the Olympic average. So with that reference margin, if you've got the full 5 years of history, we drop the lowest margin and the highest margin, and the remaining 3 years we average, and that becomes your historical reference margin that we compare the program year margin to. So an example of this, just to walk you through it step by step a little bit. This is the program year margin, and it's calculated each year that you are eligible for and that you have decided to participate in that specific program year. So in this example, we've got allowable income of $200,000 and the allowable expenses of $100,000. And then in this example, we've got 3 different accrual adjustments that came into play and became part of the calculation. There was a change in crop or livestock inventory for this producer, a decrease of $50,000 in that inventory valuation from the beginning of the fiscal year to the end of the fiscal year. Same with accounts receivable. There was an increase in accounts receivable throughout that fiscal year of $50,000. And purchased inputs was a decrease of $40,000. So the program year margin for this producer calculated out at $60,000. Now the reference margin, so that's that 5-year historical information that I've been referencing to. And we need to compare your program year margin to this history to determine whether you're going to be in a benefit or not. So with the full 5 years of history in this example, we dropped the highest year, which was year number 5, and we dropped the lowest year margin of year number 1, $220,000. And the remaining 3 years, year 2, year 3, and year 4, we've averaged out. Reference margin is $249,000. So some of the things that can cause a margin to decrease: if you've got a structure change in your farm size or your operation, if you've decreased the number of acres you're farming or decreased the number of livestock that you have on your farm, that can affect and cause your margin to drop. Again, a drop in income if those expenses have increased, or maybe your deferrals have dropped. Those can all come into play and cause that margin to decrease. And with causing your margin to increase, we've got, again, the structure change. So if you're farming more acres or you've got more livestock, if that inventory valuation from beginning of year end to the end of the year increases, if you've got an increase in income or your expenses aren't as high as they typically have been, that can all improve your margin and have that margin increase. So now these next couple charts, we're going to just show you what components make up the allowable income for the AgriStability program. To be allowable, the income and expenses have to be directly related to the primary production of your agricultural commodities. So for example, here on the allowable income side of things, we've got your commodity sales. If you've got crop insurance payments, all of that benefit and income is considered allowable. One thing we do want to bring to note here is the private insurance on the non-allowable column. Indemnities from private insurance programs. Effective for the 2020 program year, any payments from private insurance programs like hail insurance, for example, Global Ag Risk Solutions, if you have a benefit from those from that extra private insurance that you purchased, AgriStability does not count that as allowable income anymore, effective for the 2022 program year going forward. So that was an improvement to the program that came in. And just as a reminder, in 2021, Due to the drought, livestock producers were provided with an agri-recovery program to help maintain their breeding stock in the province. It was called the Drought Response Initiative, and it was possible for producers to apply. There was 2 different payments they could apply for. And if you as a producer did, that income has to be reported in the year it was received. So we wanted to just remind you that this is allowable income in your program year and non-allowable in the reference years. And it does need to be noted and reported on the forms. And on the expense side of things, here's the allowable expenses. You've got your typical fertilizer, pesticide, chemical. If you have your storage or drying costs, your electricity costs, all of those are allowable expenses for the AgriStability calculation. And again, when I mentioned about the private insurance, that premium is considered allowable expenses. So we won't count it as income for your operation, but we will accept the premium cost that you paid as an allowable expense. Program improvements. So for the 2020 AgriStability program year, producers who purchase additional risk management coverage for your farm won't have those benefits subtracted from the AgriStability benefit calculation. So again, it applies to risk management programs where the producer pays the entire premium for their coverage. Again, independent hail insurance, livestock price insurance, those premiums are 100% paid by you, the producer. So any benefit is not considered allowable income, and the premiums do remain an allowable expense. And both premiums and any benefits that you receive from those programs are allowable in the reference years. So that's one of the improvements that they made effective for the 2020 program year. And just to show you a little example, in the 2019 program year, the left-hand column, we've got $300,000 worth of sales, $150,000 worth of a crop insurance payment, and $50,000 for a hail insurance payment. Total allowable income, $500,000. And now on the right side column, the 2020 program income, that $50,000 of hail insurance indemnity is now considered non-allowable, which means the allowable income now is $450,000. So any decrease in income moves you closer to a potential benefit from AgriStability. So that's one of the improvements. Now the crop insurance benefit, that still remains as an allowable income because those premiums are partially funded by the government. And another program improvement was the removal of the reference margin limit. So that was announced in March of 2021. And that was retroactive back to the 2020 program year going forward. And it's providing approximately 18% more benefit to Saskatchewan producers, which the removal of this reference margin limit, we've already seen an increase in benefits of over $8.3 million in the 2021 program year for producers that were negatively impacted by the reference margin limit. So just to show you an example and explain how that reference margin limit impacted producers, we're going to show you side-by-side calculation, the exact same program year, just some different calculation tweaks to it. So the middle column there is the benefit calculation from 2013 to the 2018 program year, which had the reference margin limit applied. So we've got the conventional reference margin, income less expenses with some adjustments for those accruals came in at $500,000. And the allowable expenses reference margin was $250,000. So we mentioned that the reference margin, we take that Olympic average for the 3 years. Those same 3 years, the calculation looked at expenses only and averaged those out. Whichever number was lower, that's the number that the calculation would compare the program year to. The lower number here is $250,000. That's the margin used in the benefit calculation, and that was the reference margin applied. Now, the trigger point is your program year has to drop by more than 30% of your reference margin that's used. So the trigger point here is 70% of $250,000, which is $175,000. The program year margin, the current year's financial performance, that came in at $100,000. So we've got a decline of $75,000. AgriStability pays 70 cents on the dollar for every portion of decline. The check that was generated was $52,500. Now, the column on the right-hand side, that reference margin limit as part of the calculation has been removed. So now the system strictly just looks at your conventional reference margin, that 5 years of history. We do the Olympic average, $500,000. That's what we compare the program year to. So the trigger point is 70% of that $500,000, which is $350,000. Compared to that program year margin of $100,000, you have a decline of $250,000. 70 cents on the dollar for every amount of decline gets paid and calculated for the benefit amount. $175,000 is what was sent to that producer. So you can see how the reference margin limit impacted producers that had lower expenses for their reference margins. So livestock operations and organic producers, they were negatively impacted with that reference margin limit. And that is one of the improvements, major improvement, when they removed that from the calculation. And another change we wanted to highlight is effective here for the 2023 program year. The compensation rate for program payments increases from 70% to 80%. So the program year decline of 30% still stays the same. So to trigger a benefit, your program year margin still has to drop by more than 30% compared to your reference margin. Once you are in the benefit situation, that compensation is now going to be paid at 80 cents on the dollar instead of 70 cents on the dollar. And that's effective for this program year here that we're starting. So now we have a little bit of a video to show you and explain how the inventory valuation is calculated. We are stepping now into just explaining the accrual adjustments that the calculation does. It's basically about us having a clear view of what happened on your farm from the beginning of your fiscal year to the end of your fiscal year. And that's why we do all these adjustments. So the 4 key ones are the inventory valuation. Another accrual adjustment that we do is deferred income or accounts receivable, purchased inputs or prepaid expenses, and if there's any accounts payable or unpaid expenses. And we'll cover those in a little bit here too. But this first one we'll start off with is the inventory valuation video. And it's got a good explanation of how this valuation is arrived at.
Let's talk about inventory adjustments. An inventory adjustment is the difference between the value of the commodities you have on hand at the start of the fiscal year compared to what you have on hand at the end of the fiscal year. This means you can have the exact same amount of grain or livestock at the beginning of the year and the end of the year, but because of fair market values, the value of that inventory can change drastically over the course of the year. So, we value your inventory using fair market values, and essentially, if the farm's inventory value increases, it increases the program year margin. If the farm's inventory value decreases, it decreases the program year margin. We encourage people to record their inventory at the end of their fiscal year. It's a lot easier to remember what you had left on hand at the end of the year if you do it right away. By doing so, you won't have to try and recall what was on hand when it comes time to complete the program forms. Let's have a look at this picture. We'll look at the grain side. At the beginning of the year, we're going to say that there were 3 bins of durum, with each bin worth $10,000. Total $30,000 value. We sold 2 bins, so for AgriStability, we'd look for that offsetting income of $20,000 reported on your taxes. Then the crop you've harvested, you've managed to fill up 3 bins of grain. You now have 4 bins of grain at year end. If the fair market value for that grain was unchanged, we could say it was worth $40,000. So, then the inventory adjustment would have been an increase of $10,000. We have more grain than at the start of the year. That being said, let's say the fair market value changes and the price of durum goes down, and each bin is now worth $6,000, with 4 bins valued at $24,000. So now the inventory adjustment would be a decrease in value of $6,000 at the end of the year versus the beginning of the year. When we look at the livestock inventory, we are looking at 2 things: the change in herd size and the change in animal value. In this example, if you had 40 cows at the beginning of the year, sold 20 cows, and ended the year with only 20 cows, we would use the end-of-year value to determine the reduction in inventory. If the cows were worth $2,000 a head, we would value your beginning inventory at $80,000 and your ending inventory at $40,000, resulting in a program year margin reduction of $40,000. If this was a feeder operation, we would look at the price at the beginning of the year as well as the end of the year. In this example, if you had 40 750-pound steers at the start of the year, they might be worth $1,300 a head. Your beginning inventory would be valued at $52,000. If you sold those steers during the year and only purchased 20 to replace them, we would value those 20 at the year-end price. If those 20 steers were worth $1,400 a head, your ending inventory would be valued at $28,000, resulting in a program year margin reduction of $24,000.
So with the inventory valuation, SCIC, we do use fair market values to value the inventory that you have on hand at the end of your fiscal year. The fair market values, they're prices that are published at the provincial level for commodities as well as established markets. In collaboration with Agriculture and Agri-Food Canada, the provinces, Statistics Canada, and industry, that is used to gather price data on all the commodities, and they're calculated each month of the year for those corporations with non-calendar year ends. And also tolerances are implemented for each month to determine the upper and lower limits of those fair market values. So we do have people that collect that market data from trusted sources, as referenced here in the slide, such as CanFax for cattle and StatPub for grains and oilseeds. And again, it's collected throughout the year. It just helps value any commodities that you hold in inventory at the end of your specific fiscal year. And you can also see these common fair market values. They're published on our website, scic.ca. Just check under published prices, and you can go there and you can see what the value is for common commodities for each month out of the year, January right through to December. So you can check that out as well. For those commodities that aren't as common, we do ask that producers submit their own fair market values. So a good example would be organic producers. You know what price that you're getting for your commodity, for your product. So we do ask you to supply that information, that price amount for that commodity. Even pedigreed seed, that's another specialty one. So those are kind of, not part of the typical common commodities that we are tracking and getting prices on from the typical market and collaboration from other industries and stuff. So you as a producer can supply that information to us. You can just put it on the form there when you to enter your price, your dollar price per commodity, whether per ton or per bushel, however you're going to report it. So the second accrual adjustment that we're going to get into is the accounts receivable and deferred income. So we want to make sure that all the income related to that year's production is in the year that it was earned. So with the deferred income, you've chosen to postpone receipt of that income to your next fiscal tax year. So it's income owed to you, maybe for the receivable side, it's owed to you for goods delivered or services provided in one of the fiscal year, but you're not paid that until a subsequent tax year. So make sure that you report that ending deferred income to AgriStability. So in this example, it is a little screenshot of the actual form and that you fill it out and record it on. So this producer here sold some canola and deferred that income of $50,000 into the 2019 tax year or 2019 program year for this producer. Out and tell us each dollar amount that you had pre-bought. And the last one to talk about here is accounts payable or unpaid expenses. So you've bought and used them in the program year, but haven't paid for them by the end of your fiscal year. So that dollar amount needs to be reported to AgriStability. And make sure you don't include any amounts that you owe for items purchased through loans or lines of credit or credit cards, because those have already been reported as an expense with CRA on your taxes. So just to recap the margin calculation, we take the allowable income less the allowable expenses with those adjustments for the accruals, the inventory, the deferreds, receivables, the purchased inputs, and those payables. And again, we do these adjustments so that we get an accurate picture of your farm. So now that we've got the program year margins submitted by you and the reference margins are all the information is in there, how is a benefit triggered? So it's a combination of effects of several factors that maybe on their own might not trigger a payment. One situation could offset another. So you might get a bumper crop, and that can offset lower commodity prices or maybe a jump in expenses. And even on the cattle side of things, you're maybe getting higher cattle prices that could offset any increased feed expenses that you have. So all of these factors are taken into consideration when determining the program year margins and whether a benefit is triggered. So an example of calculating out the benefit. So when a program year margin declines by more than 30% of the reference margin, that's when a payment can be triggered. And when you are in a payment and benefit situation, AgriStability provides 70 cents on the dollar for every point of decline. And new for 2023, we will pay 80 cents on the dollar for every benefit of decline. So in this example, we do have a full 5 years of history. We do the Olympic average. So year 2 and year 3 are dropped because those are the low years and the high year margins. And the remaining 3 years are averaged. Average reference margin, for example, is about $300,000. 70% of that is a trigger point of $210,000. The program year margin came in at around $200,000, so it's $10,000 below that trigger point. So 70 cents on the dollar for $10,000 benefit is $7,000 that is sent to the producer. And again, new for 2023, that benefit that would be sent would be $8,000. Now, we mentioned earlier about structure change. So from time to time, that your farm operation size might change. Expanding acres, maybe reducing acres, reducing your herd size. All of those types of changes we refer to as a structure change. So when that occurs, the farming operations income and expenses for your program year will be different than what occurred in the past. So the farm's historical reference margin is no longer a good comparison to your current program year margin. So in this example, we have a producer that currently in the program year margin there on the right-hand side of the chart is currently farming 5,000 acres. Now, previous to that, year number 1, they were farming 1,000 acres in year number 1 and year number 2. Slowly started to increase their farm size so that even in year 5, they were farming 5,000 acres. So with when AgriStability does the calculation, they compare that program year number of acres to what the historical number of acres have been for each of those 5 years. And if it's more than 10% or $5,000 difference, then AgriStability will adjust those historical years up as if they had been farming 5,000 acres in those previous years, so that we're comparing farm size to farm size. So now we have some examples here to walk through. The first scenario is a grain, oilseed, and pulse crop producer. Has 8,000 acres of cropland, and in 2021, due to the drought conditions, had reduced yields. The producer ended up selling more inventory than normal, so combined with lower production, the producer had a substantial change in the crop inventory from the previous year. They were also in crop insurance and received a $250,000 crop insurance payment. So showing you the calculation, 2021, the chart on the left-hand side is the program year margin calculation. So the 2020 crop that this producer had carried in to the 2021 crop year was sold $700,000 worth, and he also sold some of his 2021 crop, $840,000 worth. Again, had that $250,000 crop insurance payment, so his total revenue is just over $1.7 million. This producer's expenses came in at $810,000, and there was a couple accrual adjustments. The purchased inputs had decreased by $150,000, and that change in inventory valuation, there was a decrease of $690,000 for this producer. So the program year margin calculated out at $140,000. Now the chart on the right is determining whether this producer is in a benefit situation. Historically, the reference margin for this producer is $1.3 million, and the 2021 program margin came in at $140,000. The AgriStability coverage is 70% of the reference margin, so 70% of the $1.3 million is $910,000, leaving a decline in the program year margin of $770,000. So the difference between $910,000 compared to the 2021 program margin of $140,000. AgriStability payment for this 2021 program year, 70 cents on the dollar. So the benefit that was sent to the producer was $539,000. The second scenario here is a cattle producer. He experienced, again, in the 2021 drought year, a shortage of feed and pasture. He also sold feeders that he brought into the year from the previous year, and he ended up selling his calves that he normally would have kept and backgrounded over the winter. He had to purchase additional feed to maintain the existing herd, again, due to the poor forage yields. So this cattle producer, the program year margin in the chart on the left-hand side, sold his 2021 calf crop and those feeders for $480,000, had applied for that Drought Response Initiative and was paid that in the 2021 program year of $25,000 with a total revenue of $505,000. His expenses came in at $240,000. He had to be hauling his cattle to alternate pastures as well as purchasing extra feed. And the inventory change with the accrual adjustment, that large decrease of inventory valuation of $250,000 caused the program margin to be $15,000 for the 2021 program year. Now, comparing that to historical information, the reference margin typically is $180,000 for this producer. Again, the AgriStability coverage, 70% of that reference margin. So the AgriStability coverage is $126,000. The 2021 program margin came in well below that at $15,000 with it. So that's a decline in the program year of $111,000. AgriStability pays 70 cents for every dollar of decline. $77,700 was sent to this producer for AgriStability benefit. And the third example we have here is a mixed farming operation. It's a producer that has 1,000 crop acres and 500 forage acres with 250 cow-calf operation. His yields on his crops were reduced due to the drought in 2021. And he also suffered from gopher damage on those crops. He sold more inventory than normal, so that combined with the lower production, he had a substantial change in crop inventory valuation from the previous year. He sold all of his calves and feeders, and he also decreased his herd size and sold 50 cows in 2021. He was short of feed and had to just decrease that herd size. He also received an $80,000 crop insurance payment. So coming up with his calculation, again, on the left-hand side in that chart, the 2021 program year, he had 2020 crop that he had carried over, ended up selling that in 2021 for $100,000, sold his 2021 crop of $55,000, as well as his 2021 cattle sales, the calves, the feeders, $250,000. And those cows that he had to decrease his herd size as well. And the crop insurance payment, $80,000 he received for that. So the total revenue comes in at $485,000. His expenses, $155,000. And there's a couple accrual adjustments. The purchased inputs decreased by $20,000. And the inventory valuation changed, a decrease of $300,000. His 2021 program margin comes in at $10,000. Historically, the reference margin for this producer is actually $175,000. So the program year margin of 2021 at $10,000 is well below that. The trigger point, the AgriStability coverage, is 70% of that reference margin, $122,500. So the decline in the program year is the difference between the $10,000 and that $122,500. So the decline is $112,500. AgriStability pays 70 cents for every dollar of decline. A check was written to this producer for $78,750. So once you do enroll in the AgriStability program and are proceeding throughout your program year, the first thing that you have access to is an interim benefit. So this provides an option to receive a portion of your AgriStability benefit early prior to your year end. It's a way for us to get cash to you sooner. The interim advance payment is calculated based on an estimate of your final benefit. You can apply for an interim anytime during your fiscal year, up to 90 days after your fiscal year end, and once a production cycle has been completed. So for the 2022 program year that just finished, that deadline is March 31st of 2023. Now, because it's calculated and based on an estimate of your final benefit, an interim amount, if there is a benefit calculated, 50% of that does get paid to you, the producer. The remaining benefit amount is paid when you submit your final program year forms, because that is a necessity for an interim benefit, and the information has been submitted and the file finalized, and then any additional benefit is sent to you, the producer, at that time. So now we're going to jump to our public website, and I'm going to walk you through where to find some information and talk about the AgriStability forms, and we're going to walk through also an example of filling out and completing some AgriStability forms. So when you come to SCIC.ca, this is the main page that you come to, that you're introduced to. Here on the top third, this green menu banner, that's where you can access information about crop insurance, wildlife damage, livestock price insurance. There's resources if you need to look up some maps or some calculators. And there's also AgriStability. In the top right-hand corner, you've got access to your Crop Connect, which is your individual online access to your crop insurance. And there's also Ag Connect. So if you're in AgriStability, you can set up your own online account and access your AgriStability information. As a new participant, you can view some of the information there in year number 1. Once you've been in AgriStability, starting in year number 2, you can actually go to Ag Connect and submit your AgriStability information to us through that online portal. You key in your information and submit it to us. And you can also look at some historical information there as well. And I'm going to touch on that further on into the presentation here. So, but first off, I'll show you AgriStability. So if you click on the AgriStability tab, there's a lot of information in here, a lot of the information that is being covered in this presentation. You can review and go over it, how margins are calculated, how the program fees are calculated, the prices that we mentioned earlier with the inventory valuation. You can check out the prices there that are listed, as well as the program forms. So I'm going to click on program forms. And the featured forms that pop up are currently highlighting the 2022 program year forms. So there's forms here if you're a corporation. Here's your corporation's forms. You have the option of selecting either the fillable form, or if you want to print that form off and complete it and send it in, you've got that choice there. The supplemental information form, whether you are an individual participant, a sole proprietor for filing to Canada Revenue Agency, or a corporation, either entity needs to complete a supplemental information form as well and submit it to AgriStability. And I'm going to walk through an example of one of these. Again, you can select the fillable form or the printable form. It's your choice. Here's the commodity code guide. If you're trying to find some codes for some of your commodities, or on the inventory side of things, or for the income and expense side of things, that's your go-to. And we also have a link for Canada Revenue Agency. So if you're trying to access some of your CRA forms, there is a short link here that will take you right to the CRA website. And then the more you scroll down, then the standard forms, they're all in alphabetical order. So you're able to find the form that you need and submit and request it. So here, for example, is an amendment request. So if you have sent in your information and provided your numbers of inventories and such, and later on you're like, oh shoot, I forgot and I made a mistake there, I need to correct some numbers, you can use this amendment request form. Just write down the change that needs to be corrected and send it into our AgriStability at head office. And again, it's alphabetical, and then there's 3 pages here. So there's lots of different options and lots of different forms. So if you're looking for some of the information here, this is your go-to. The key things I want to highlight right now are the, once you get into the forms, there is a guide that will walk you through either the corporation's form or the supplemental form. And these guides are excellent source and an excellent tool for you for walking through and explaining what goes into each section of the form. There is a great explanation on the left-hand side and referenced numerical colors for each section and what is needed. They have provided some examples in there too with the explanations, and it just walks you through step by step on how to fill out these forms and the information that is needed. So it's a great reference for you when you're going to be completing the forms. So now, as a supplemental information with either a corporation or an individual, this information lets us know the acres that you farmed, what crops you seeded, the inventories of your livestock, etc. And this has to be completed and submitted into AgriStability at scic.ca if you want to email it, or you can fax it in or drop it off at your local crop insurance office. So just to walk you through an example here of the form, and I opened up the fillable form. For your SCIC ID number, you just basically key in the information of what needs to go where. Your name, your address, your phone numbers, the key phone numbers that you want. One thing to note here is with the SCIC ID number, that is not your crop insurance number. They are two different programs, and AgriStability has their own ID number that they assign to you through SCIC, and crop insurance has a contract number set up for your crop insurance information. So they are different numbers, so make sure you are using the AgriStability SCIC ID number for your paperwork that you submit to AgriStability. So just walking through the form, the section here for contact person, if you want to be naming either an accounting firm or maybe a son or daughter or a spouse or a brother to be able to act on your behalf or ask information about your AgriStability, or if our people at AgriStability head office, when they're checking on the file and maybe have some questions, they have your permission by you naming a contact person. We can contact that person and discuss your AgriStability file with them and ask them the questions as well. The only thing you need to make sure that you do if you're naming a contact person, on page number 2 is where the signature is required. So we need your signature to add that contact person into our system. Participant profile, you just check off the appropriate one. I'm going to be filling this one out here for an individual sole proprietor, a farm in Saskatchewan. Going on to page number 2, your home quarter, and you just follow through and answer the question. So was 2022 your final year of farming? No, it wasn't. Have you completed a production cycle? Yes, I sure have. I seeded acres and I harvested them, so I'm good to go. If you want to supply some extra information, you can. This is where you will be signing and dating the form at the bottom of page 2. Page number 3, is your farm involved in a crop share agreement? How is this operation managed? I checked off that it's a single farm, but actually maybe it's a partnership. Maybe this individual is in a partnership with, here I typed in a corporation, and you just type in the percentage share of that partnership agreement. I made this one as a 50-50 partnership, just for example purposes. Type of accounting used, cash or accrual, and the fiscal year of the operation. So this is an individual, so your fiscal year is from the 1st of January to the 31st of December. If you're filling this out and completing the corporation's form, make sure you state the correct fiscal year for your corporation if it's a non-calendar year end. And if it is a calendar year end, make sure you note that too. So going on to page number 4, this is where you're going to tell us the information about your operation. So has the productive capacity of it decreased during the program year due to the disaster circumstances? In 2022, for this producer, he says no for livestock and for crops. And again, if they are in crop insurance, then make sure you tell us your crop insurance number here. And if you're in crop insurance, here's the location where you can enter your crop insurance number, just so that AgriStability knows you are in crop insurance and participate in crop insurance. I've got some examples here where I'm going to do some livestock inventory. So you're going to tell us the type of livestock you have still on your farm, on your ranch, as of the end of your fiscal year. So the ending inventory for this producer is as of the 31st of December of 2022. So once you type in the code, if you go to the code guide and you can find the code, that description is going to pre-populate in. So code 8000 is for commercial bulls, and this producer has an ending inventory of 3, and he's going to give us a value of $6,000 per head for those bulls. Now the price per unit on the commodity code guide, there's a column for price, and if there's an X in that column, we are tracking those fair market values of those commodities. So you don't have to supply a price. If there is no X in that column and it's blank, a good example too is organic producers for organic crops. you will have to provide a price per unit. So your best estimate of what that value is of that commodity. I'm going to key in code 8002 for cows, and this producer here has 100 head. And at the end of December, they still had some steers on hand, and I'm going to do some heifer feeders as well, and they had 15 of those. Okay, and that's the livestock side of things. Now I'm getting into the crops. So this producer does have some hay, alfalfa grass. Units, this producer is going to have some large bales, 200 acres, and he baled 350 bales off of those acres. And for ending inventory, as of the 31st of December, I'm going to say he had 340 bales. So he's fed 10 bales already of that alfalfa grass that he had produced. I'm also going to give this producer some green feed. He bales that, 120 acres, got 150 bales, and he still has those bales on the farm for ending inventory as of the 31st of December, because he hasn't fed any of those yet. Also on the crop side of things, he seeded some canola. And the canola production, you can report it in either tons or bushels. It's your choice on how you want to report that. I'm going to do tons, 175 acres, 140 tons produced, and ending inventory for his canola is 160 ton. So the ending inventory as of the 31st of December, even if you had carryover production from a prior year, ending inventory is ending inventory. So you need to make sure that you include prior year's grain or bales in that ending inventory. So this producer still had another 20 ton from a previous year. That's why the ending inventory is now 160 ton. Also to note, when you're listing your commodities, your grains, you need to report it by grade. And again, it's because of the price difference. So canola sample is way different price than number one canola. So I'm going to give this producer here some sample canola tons. He actually only produced about 10 tons, had some, and no, I'm going to have him sell it. He doesn't want to track that and be affected by any heated grain. So zero ending inventory for that sample canola because he sold it within this fiscal year. And wheat, number one wheat, again, tons. He didn't seed any wheat though, but he had wheat from a previous year of 13 ton. And then if you want to be reporting I'm going to give this producer 400 acres of pasture. If you had any unseedable acres, you would report them here. And again, too, if you don't have any livestock, for example, on the livestock inventory valuation section, on the far right-hand side, there's a little checkoff box. Just check it off. Nothing to report. You have nothing filled in here. You're letting us know, no, I don't have any livestock. Now with this producer with the livestock, now we're in section 9 for the livestock productive capacity. So for the cattle side of things, we need to know the number of cows that calved because that's your productive units, that's your productive animals for your operation. Remember, we were talking about structure change. So if the number of productive animals for your operation decreases from year to year, this is the area that those numbers are captured and that farm size basically is captured too. So with this producer, I'm going to put down 97 cows calved. So even if the calf died, you will be including the number here. That cow calved or even had been planning to calve, that number is included there. And just continuing on to page number 5. If you have some feeder cattle, for example, if you fed some calves that you carried over from a previous year, this is not current year calves, so that these are not calves from your 2022 calf crop. It's calves maybe that you carried over from 2021, fed them and backgrounded them, and still kept them on hand and fed them throughout 2022, 60 days continuous feed, and as well as a 200-pound weight gain. We're going to say this producer had 27 feeder cattle. Section 10, here's where we get into the purchased inputs or prepaid expenses. I'm going to say this producer pre-bought some canola seed of $30,000, but he's not going to use that canola seed until the 2023 program year. And also fertilizer and soil supplements, $50,000 worth of fertilizer pre-bought. We just need to know the description and the dollar amount as of year end, the 31st of December, 2022. In section 11, any deferred income or accounts receivable. So this producer sold some cattle, sold some of his calves, and deferred that income to 2023 of $100,000. And he also sold those feeders, 50 grand, and deferred that as well. Any unpaid expenses, a typical one that I see in dealing with the producers is maybe the crop insurance premium was still outstanding as of December 31st. We'll say you had $20,000 crop insurance premium amount. And that's the supplemental form. Page number 6 actually is if you need extra lines, it's available for you to add and expand onto page number 6. But that's the key information that we need for you and the supplemental information for your operation for the 2022 program year. Now going back, I'm just going to show you on the guide for the corporations. So the key difference between for an individual sole proprietor versus a corporation. As a corporation, you have to be filing your farm income and expense and submitting that information to SCIC AgriStability. The form for corporation captures that income amount here on page number 4. And page number 5 is the expenses. And then the statement of farming activities and who the shareholders are, and if this corporation is involved in a partnership. This information gets submitted to SCIC AgriStability, and we send it to Agriculture and Agri-Food Canada, who calculates out the Agri-Invest portion for the corporation. The continuing pages here, page number 7, that's where you get into the livestock inventory valuation I just walked through, as well as the crop inventory, the livestock productive capacity. So page 7 and page 8 are identical to the supplemental information form that I walked through for an individual. The only difference is that income and expense amount. Okay. So that's the information on our website and walking through some of the program year forms. And now we're just going to touch on some of the tools and worksheets that are available on the website. The first one here we're going to touch on is the year-end inventory check form. So you were mailed these, was kind of like a little postcard notification about the 2022 year-end inventory check. Just as a reminder to capture that information. December 31st, the year end is, not that far back, a month and a half ago. It's way easier to remember the numbers now. So just jot down your types of crops that you seeded, how many acres, what your production and ending inventories were. Maybe you had some feed type. Maybe you had some some alfalfa grass bales or some green feed bales. What was your ending inventory for that? And same with your livestock and your purchased inputs, any payables or receivables. This is just a card that you can jot down those numbers on and record them to help you complete your program forms later on. Another worksheet is available on the website is the crop inventory calculation worksheet. This is just an example of a screenshot of that worksheet. It will help you just track each commodity. So in this example, it's the canola. Producer knew he started off with about 600 tons at the beginning of his fiscal year. He produced 450 ton. He knows he sold 300 ton throughout that tax year. And that, as soon as you enter these numbers into the form, it calculates out that ending inventory information that would be transposed onto the supplemental information form. This is the calculation worksheet for crops, the complete form and how it looks on our website. And we also have a worksheet for livestock inventory. So it will help you track your animals from beginning of your fiscal year to the end. And again, it helps you come up with that ending inventory amount. Again, these are just worksheets. It's optional on whether you complete these or not. They're just extra tools that you can use to help you come up with those numbers. And this is a picture of the form, the complete form from the website. Again, just to highlight the instruction guides, there is an AgriStability supplemental information guide and the corporation's guide that I reviewed. So now you've completed your program forms. You've submitted and recorded all your numbers and information and you've sent it in. Now we're going to determine whether you're in a benefit situation. And once your file is finalized, approved, paid, and closed, a calculation of benefit statement is generated. And that will tell you the final numbers on whether you're in a benefit or not, and it summarizes the information. So here's the first couple pages is an example of a calculation of benefit statement that was generated for the 2020 program year. As a producer, you get the first 2 pages of your calculation of benefit statement mailed to you. Typically, the statement is comprised of, depending on the farm size, they vary from 9 pages to 12 to 14 pages long. Only the first 2 pages are mailed to you. You can access the document in its entirety either through AgConnect, your AgConnect account, or you can call our toll-free call center and request the complete form, or go to your local SCIC office and ask them to print it off for you as well. Just to summarize the first couple pages here, this is page number 1, and it just gives you a summary of the reference margin amount, the program year margin amount, and whether there's an eligible margin decline. So for this producer, the reference margin, historical 5-year history, Olympic average, came in at $21,024. Program year margin, $48,637. So 70% of the reference margin, so 70% of $21,024 is $14,717. That's the trigger point. The program year margin is well above that, so there is no eligible margin decline. There is $0 benefit paid to this producer. Now, page number 2 summarizes and shows the historical 5 years reference margin and the program year margins, the numbers that were calculated, and how they were transposed and shown and detailed on page number 1. So this producer has a full 5 years of history. The Olympic average, 2018 and 2019 program year margins were dropped and the remaining 3 were averaged. So you can see in the bold column here or the bold row of F, that those 3 years were averaged to come up with a reference margin of $21,024. The program year margin, income less the expenses with the changes for the accrual adjustments, that production margin came in at $48,638. Now, to note, earlier in the presentation, we talked about structure change. So you can see in row E, there was a structure change adjustment. So in row D, that's your typical production margin. The calculation, the productive units and farm size, number of acres or livestock for this producer were, for the program year margin, for the program year, were compared to those productive units or acres from into the previous years. And you can see that in 2020, that producer has either decreased in farm size, livestock or acres. So historically, the reference margin years were adjusted accordingly. And that's in row E for the structural change adjustment row. So the adjusted production margin, because of that structure change, is now here in row F. So going back to the first page, here's the $21,024. That's the reference margin and the program year margin. And that's the calculation of benefit statement. Now I'm just going to touch a little bit on AgConnect that I've talked about throughout the presentation here. It's our online tool. You have access to your information 24/7. You can submit information through AgConnect if you want to submit some extra details, some extra supporting documents. You can submit those electronically. You can look at your historical information. You can look to see what your program fee was, as well as you can look at the detailed calculation of benefit statement for a specific program year. So when you activate your AgConnect account, this is your welcome page that you are brought to once you have set up your password and access and everything. The menu bar here, the blue menu bar on the left, that's where you can select whatever year you want to go back and check on. You can look again, the program fee is here, the calculation of benefits, you can look at it. Towards the top, the submitted files. So if you can't remember whether you submitted your program year forms for a specific year or the current year, you can click on that and it will tell you what's been submitted or what is still outstanding. As well, there's a benefit history. So you can see what the historical benefits have been for your operation with your AgriStability account. If you go into e-forms, and you can, once you've been in AgriStability for your first complete year, in year number 2, you can actually submit your supplemental information that I went through on the forms with you. You can actually key it here into your AgConnect account and submit it, and it directly preloads right into our system at head office. Another set of hands does not have to key it, and it's instantaneous. As soon as you enter it and submit it, you get a confirmation number saying when you submitted the information and the date and time, and you're done. To highlight some of the deadlines for AgriStability program, first one is March 31st. Again, that's the 2022 interim application deadline. April 30th is the deadline to enroll for the 2023 program year. It's as simple as calling our toll-free number or your local SCIC office and requesting to participate in the 2023 program year. We'll take some little bit of information from you and get you set up and into the system, and we will generate and mail you an enrollment notice for the 2023 program year. September 30th, that is the deadline to submit your 2022 program forms without any kind of penalty. And December 31st is the final deadline to submit those program forms for the 2022 program year with a penalty if you're in a benefit situation. So for each month that you are late, October, November, or December, if you're in a benefit situation, $500 per month, a maximum of $1,500. could be deducted from your benefit. If you're not in a benefit situation for the 2022 program year, there is no penalty assessed against the 2022 program. And also, December 31st is the final deadline to pay your program fees for the 2023 program year. Now, currently, if you were in AgriStability last year, you will be getting your enrollment notice mailed to you. They were generated the third week of February here and mailed out. So you will be receiving those in the mail. You have till April 30th to pay that fee without any kind of penalty. After that initial penalty-free deadline, there is a 20% penalty added to the program fees, and the final deadline to pay those fees is December 31st. If you need to contact us, here's our contact information. On the left-hand side is for SCIC, the crop insurance information toll-free number, as well as their email, customer.service@scic.ca. And on the right-hand side is the AgriStability contact information. We do have a toll-free contact number there as well for our call center, and the AgriStability@scic.ca email. That concludes our presentation. Thank you so much for joining us, and have a great day.